Hello, Dave Knight once again on the weekly wrap up. Today is Saturday, June 21st, 2008. I wanted to say hi to everybody. Thank you for tuning in for the next few minutes and taking time out of your life to hear me talk for a while. And here I am talking in front of a webcam and a microphone. It's kind of crazy if you think about all the technology that's increased over the last 10 years, but it's really neat that I can sit here in my trading room and talk to you a little bit about what I did in my week. Uh, on Monday and Tuesday, let me just back up one thing. On Friday or Saturday, I'm going to take the leisure to be able to do a Friday weekly wrap up or a Saturday weekly wrap up, depending upon what's going on in my life. But with that being said, let's move on to my trading week. On Monday and Tuesday, I was out of the market. I was still up at camp over Father's Day weekend. And then I ended up trading Wednesday, Thursday, and Friday. On Wednesday, I opened my trading week up with a win on the ZB. I lost on the ES contract twice and and then I had another break-even trade on the ES contract. I had 4 trades during the day. I was 50% on my win-loss rate on my win-to-loss ratio, but I ended up losing more than I won for that day, even though I had a 50% win-to-loss ratio. My wins were just at a little above break even, and my losses went down to my protective stop loss that I carry in my market, which is not. I carry a very, I guess, what you would call a tight stop. If I'm wrong direction, but if I'm wrong the market or wrong timing or so forth, I want to get out of that market. I don't want to, for instance, I don't want to move that stop to give more room. I don't want to be able to put myself in the position to lose even more money by doing things that I know are not right. If I'm not right in that trade, best thing to do is to get out. On a side note, let me say that people will say, or some people will say, hey, look at my trading method. I'm 70% right in the market. But just because they say they're right in the market, just because they say, hey, look at what's going on, maybe their trading method is actually getting them, but what about their break-even trades? And more importantly, what are their net gains? What is the net losses? Just because they say they're winning in the market does not necessarily mean they're winning in their account balance. There's a huge difference, and something I wanted to make a point about that. So just because someone says, hey, look at me, I'm 80% right. Well, what if happens if 50% of the time they're all at break even, the other 30% they're taking big losses? Well, they have a losing system even though they're 80% right. So what you want to make sure on your back testing, on your looking at a trading method, are they winning money? Are they growing that account balance? One of the things I strongly encourage, and we'll get into it in a future time, is fixed ratio money management, and we'll get into that later and more in depth as time goes on. But I just want to enter that concept to you: fixed ratio money management, using that to increase your account balance as your leverage increases. As basically your curve, if I can get this going right, your curve starts like this, and then as time goes on, as your account balance grows, your risk ratio decreases. That's kind of, it's the flat here. It goes up and then it goes down as time goes on, as your account balance grows in relation to what you're risking in the market. That's what's called fixed ratio money management. Anyway, we'll go over that later in detail. Thursday. This is the day that I ended up getting my money back out of the market, taking it for somebody else. It's awesome to do that. It was a good day for me. I ended up, my best trade of that day was if you'll take a look at the ES contract that I have in front of me right now on my trading station next to me. What you're going to see on the ES contract was that I kind of put a line across. You'll see that line at 13.41 and 50. If you look back a couple days, at least if you look back the next day, it looks like it would go up there, then it would come down, then it would settle around that area. So what I saw was there's a lot of support and there was a lot of resistance at 13.41 and a half. I decided and that's why I drew that line there. I went on the market on the second green bar at 13.40 and 50. I had 5 points from that was 13.45.50. It was halfway between 13.40.50 and 13.50.50 on the ADR, or the average daily range. I went 5 points. I figured that market, if it was going to pop, this was the time it was going to pop. It was the right time of the day, and it did. It worked out just fine. I got I took most of my contracts on the ES off right there at 13.45 and a half, and the remainder I took off at 13.49 and a quarter, and that was a very nice trading day for me. And ended up getting a little above break even. Actually, I was in profit after this trade. I had some other during the day. Basically, to make a long story short, I think I was 4 trades. I had 3 wins, 1 loss, and ended up being, and this one right here was my big winner of the day. Friday, let me look at my market. There was nothing really happening on my economic market. On Wednesday, you had the crude oil report. On Thursday, I was looking at the unemployment claims, and I was also looking at the FOMC member speaking at 2:30 in the afternoon on Thursday. Friday, there was really nothing happening in the market. This was a great day to trade early. The bond market opened up at 8:20 Eastern Time. 8:35, I was in the market. I was long on the bonds, and I was out fairly shortly after that on a nice little target move. This was a good trading week for me, even though Wednesday ended up being bad. I try not to take more than 2 losses in any given day, even if I'm going break even and so forth. But when I trade, for instance, those 4 trades that I did on Wednesday, although I had 2 winners and I had 2 losers, you would think, well, you're break even, you're at 0 as far as your wins against your losses. But my account balance was telling me, hey, I'm down on my account balance. I'm not doing very well. Best thing to do is take a walk away, and get away from the markets for a while. Get away from the computer. Go read a book. Go outside for a while. Go get something to eat. Go play golf. Whatever you like to do. When you're losing in the markets and your account balance is saying you're losing, walk away. It doesn't hurt you to walk away and trade for the next day. Thursday and Friday ended up being nice trending days and nice days to catch the market, as you can tell. The Dow went down. On the side note, let's talk about the Dow. The Dow is down 10.3% over the year. What does that mean? Well, what it means to you, what it means to me is you need to trade what you see, not what you think. Don't listen. This week coming, you're going to find out that there's a lot of FOMC talk and rumors in the market. What's going to happen to gold? Is oil going to go to $450 a gallon? Who knows? Who knows where oil is going to end up? But what we know right now is we're paying a lot of money at the pump. A lot of people are hurting right now. And what's going to happen in the market? Well, us as day traders, that's really not our call. It's not what we are trying to do. We're trying to take advantage of short-term profits. Don't try to get your opinion mixed up with what's going on in the market. That's where you're going to lose your money. Just because you're right direction doesn't mean you're going to be right time. Always remember that. Just because you are right direction doesn't mean that you're going to be right during your time. Once again, I want to mention the book of the week that I same of this week to last week. I'm almost running out of time. I want to make this and we'll wrap it up before the market all. But if you remember, I put this up last week. I want to do it one more time. I put a recommended book list up on my blog. You'll see it on the right-hand side. Some of the favorite books that I've read over the last 25 years. One of the books that I just finished reading and I really liked is The Complete Guide to Day Trading, written by Marcus Highcutter. That's Marcus Highcutter. This is a really good basic day trading book. I enjoyed it. He's got some great concepts about what he goes over. For instance, he talks about, let me just flip, the secrets to day trading success in part 3 of his book. Really good points in there. You can find it on my recommended book list. Go to Amazon and get yourself your own copy as well. It's a paperback book, won't cost you a lot of money. Looking at the time, I got less than a minute to talk, so I want to wish you guys a good weekend and a happy trading week coming into next week. Once again, don't forget that even though you may be right the market direction, you're not going to be right time. So always trade what you see, as a good mentor friend of mine said. Trade what you see, not what you think. And another thing I want to leave you with is this. Be the remora, people. Be the remora. Don't be the shark. The shark, and if you're in the fish in front of that shark, you're going to get eaten every time. Be the remora, the pilot fish that follows behind the shark. You want to be that when you're day trading. You want to be following the market makers. You want to be moving behind them, and you want to take up some of the middle that's going on in the middle. Don't get in front of that shark, friends. That's it for now. Have a good one. Bye now.